I'm replacing Nastasia for the markets, so let's get straight into the indicators. Okay, so just looking at the boards there, we do see that markets are on the back foot for now. To find out what's going on and what's driving markets at the moment, I've got Makwe Masilela via Zoom. He's the CIO of Makwe Fund Managers. Thank you very much for joining us, Makwe. So why are we seeing markets seemingly in the red today?
Good day to you and to the viewers. No, it's a question of we're worried about global inflation, and this whole thing with energy prices going up exacerbated the situation, and also not forgetting that we still have concerns or serious worries when it comes to the property sector of the Chinese government, because we've seen that what they call it Evergrande, even yesterday they missed another debt repayment, so that's a big issue for us. But as we all know, that if this inflation continues as it does for now, and then it's going to be an issue when it comes to global economic growth, as we know that inflation is negative for growth. And bearing in mind that at some point, most market participants, we bought a story from policymakers that this inflation is temporary, but now lately we are starting to question that is this really temporary or so, and will this lead to central banks to start acting on it or not?
When can we expect signals from central banks around this very issue, given that their theory that it was transitory doesn't really seem to be holding up anymore?
I don't think they will easily give in to that, to say that guys were wrong, we're behind the curve. But I think starting with the US Fed, come November, we expect them to announce something, especially when it comes to tapering, or the worst case scenario should be December, that they will start maybe tempering their bond purchases. And also the likes of the UK, the Bank of England, to expect them to start doing something to guard against inflation. And that also applies to the likes of the European Central Bank. And without any doubt back home here, if those guys start moving, we also have to start doing something. But I don't think we'll expect to see an interest rate hike this year or so, but we'll see the stimulus or the easy money. I mean, they will start removing that from the table bit by bit.
So what's the story around the whole energy complex? We do see that, there's shortages of natural gas, and those prices have shot up in Europe and elsewhere. And the Brent crude oil price is hovering around that $84 a barrel level. The rand has sort of weakened, which of course is not great news for us here in South Africa, because we're likely to experience even higher fuel prices. What's the story there? What can we expect?
You know, this whole thing started with the issue about the gas, the liquefied natural gas. When you start seeing some shortage of supply and prices going up, then people started switching from that, also starting to use oil prices. So demand also, started using oil, then demand started picking up. And it's happening at the time where the global economy was trying to recover. As a result, oil demand started to look much better. So now with all that, we see oil prices also benefiting from that end. And then you have stories with China as well when it comes to coal. Remember, 60% of the electricity supply comes from coal, and it's not just China, India as well. They've got issues, and I think they use almost 70% to generate electricity. So that as well is pushing coal prices high. And now the problem here is there's not enough supply. And on top of that, we know the likes of OPEC, they're not looking to start increasing rapidly when it comes to output. They will gradually start putting more into production. They're doing, I think, plus minus 400,000 barrels per day. So, and also you look at Qatar, which is supposed to be the biggest producer when it comes to LNG. That's saying there's nothing more we can do. We cannot supply enough to try to help with the prices. So that itself exacerbated the concerns that have been there when it comes to inflation. And as we said earlier, that will impact negatively when it comes to economic growth.
And then on the local data front, we've had mining numbers and manufacturing production data, positive numbers, but not exactly shooting the lights out. Your reading, I know it's only one data point for one particular month, but what's your reading?
Very important, those two sectors. Remember, combined, they make almost 22-23% of our economy. And starting with mining, I mean, markets were expecting a 6% increase. After in July, they went up by over 12%. But unfortunately, we just got 2%, and we were held by the likes of iron ore, PGM, and gold. And then, unfortunately, coal, it was a negative contributor. And manufacturing was much better than expected, because we expected an increase of 0.15%, but we realized an increase of 1.8%. But that's much lower than what we have seen in July.
Makwe, we're going to leave it there because we've run out of time, but thank you very much for your insights as always. Makwe Masilela, he's the Chief Investment Officer at Makwe Fund Managers. We'll have more news for you after a short break.